page 12 of 287. The Rise and Fall of Neoliberal Capitalism, David M. Kotz, 2015. Chapter 2. What is Neoliberalism? 2.2. The Global Economy. The Bretton Woods system governed the international economy in the period of regulated capitalism. That system originated in a 1944 conference in Bretton Woods, New Hampshire, at which the United States and its allies laid down the design of the postwar international economic system. It gave birth to the International Monetary Fund, IMF, and the World Bank, which were to oversee the new global system. While the Bretton Woods system encouraged trade in goods, calling for the gradual reduction of barriers, significant tariffs were allowed under certain conditions and states had the right to regulate capital movements in various ways. This produced a global system that was somewhat open to international trade but with significant barriers, particularly for capital movements. The U.S. dollar, backed by gold at a fixed rate, assumed the role of global trading and reserve currency. The other major powers' currencies were tied to the dollar, creating a system of fixed exchange rates for the major world currencies. IMF approval was required for any change in a major nation's relative currency value. During 1967–1973 the Bretton Woods system broke down in stages, fully collapsing in 1973 when the U.S. government announced that the dollar would be allowed to float, that is, to rise and fall based on market forces in international currency markets. This ended the system of fixed exchange rates that had been at the center of the Bretton Woods system. After a period of chaos in the international monetary system in the 1970s, a new system emerged in the early 1980s that had two main features. First, a managed float developed, with governments allowing international currency markets to play a major role in setting currency values but with significant interventions by central banks aimed at influencing the result. Another example of a historical step backward occurred when capitalism was bringing rapid economic progress in the 16th to 19th centuries, yet an archaic slave-based economic system arose and expanded in close association with it in the Americas. 232. Second, and more importantly, the new system emphasized free movement of goods, services, capital, and money across national boundaries. Actual history is messier than the theory of how it develops might suggest. While the social structure of accumulation theory can be taken to assert that an entire coherent set of accumulation and profit-promoting institutions arise in a relatively compressed time period, history shows that each past social structure of accumulation has developed over a somewhat extended period of time out of a complex series of events. Kotz, 1994. The IMF and World Bank remained in business, but their roles changed, as they became the enforcers of a new, more open global system of trade, investment, and money, as well as major promoters of other features of neoliberalism around the world. Some new international organizations arose over time, the most important of which is the World Trade Organization, born in 1995, whose aim is to enforce free trade. In the neoliberal era, the global economy became much more open than it had been in the regulated capitalist era. Figure 2.1 shows that world exports relative to world gross domestic product (GDP), which had begun to increase significantly after the mid-1960s, grew much more rapidly after the early 1980s. Gross domestic product. Definition. Gross domestic product, GDP, is the standard measure of the value added created through the production of goods and services in a country during a certain period. Page 13.